following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome to the show. I know you guys know what's going on here. What an event. And I actually went to a Bloomberg little event in Durham, North Carolina yesterday. Talked at it for a little while, but you know, the main focus there, it's interesting how this happened because the main focus at that event was basically trying to stay on par with, you know, benchmarks. And it wasn't really about, you know, beating the benchmark. It was just making sure that those money managers there, that was the theme of what Bloomberg was trying to say the whole, 2 hours. And then I stepped in. And you know, they were doing these back tests and PE ratios, all this kind of stuff. And then all of a sudden, as soon as the event's over, this starts creeping in. And I was sitting there laughing, to myself during the meeting going, these people, they got the propellers on top of their head and they're trying to figure out, the latest, greatest way to back test and do these little things where they're, going to just match the S&Ps with the portfolio. And, nobody really seemingly in that room was thinking about preparing for something like this to happen. And you've always got to be on your guard. Yesterday, in fact, we talked about, volatility play. Daisy, I think, called in, different ways to look at different events and you're not trying to track whether, a company's PE ratio or something weird like that, or something not weird like that is going to, be a factor in, having the powder dry and then actually putting it to work, in situations like this. Didn't even come up yesterday during that 2 hours. So we also talked a little bit about buying some 140 puts as lottery tickets on the euro, just in case, that was a crazy risk-reward ratio on that one, but should continue to still have volatility here. We're looking at the British pound right now, and as we look at this, here's the weekly on it. There's that 140 that we talked about was going to be the breaking point, and that actually has been, and I'm going to show you this here, this morning. When these big levels are broken, there's that rally back point that kind of go down, and we usually have a retest. And what do we reach here? 139.81 on the British pound. And if you guys have been up all night, get some more coffee because it's going to continue the opportunities here. Let's take a look at the couple of things. There's so much to talk about this morning. Let's just go right into the dollar and the notes. I want to kind of focus on those for a second. Here's a 10-year. Here's a September contract. I was watching this last night and then, maybe got an hour's sleep. This was incredible. I mean, we talked about, having to sit on the sidelines for a little while, but, I don't, the 10 years just going to have think about it. I mean, you've got, what have you got here? You've got the euro, which is probably going to become seriously in question about, what is the euro and how do you leg out of this situation financially if you're, trying to deal with euros, and what are euros actually valued at? I mean, Great Britain, again, this is like Steve and I talked about, this is a 2-year process to even kind of exit. And they're probably going to have a vote or two in between, and the market's thinking that right now because, well, this might not be the end of the world, and they may rethink their situations based on the, the calamity going on. Like, can they suffer through something like this to get to the other side of the fence with the exit? And a lot of people may change their mind. They may have a revote. They can do anything they want to, but let's just say other countries kind of catch that same fever. How do you value the euro at that point? So in my opinion, the 10-year is going to be something as debt laden as this country is. The 10-year is going to be something that's just going to continue to have a bid in it. It's been almost impossible to short this thing. I was a little perturbed that it even got below 131.07 the other day. I got personally stopped out of that trade, but these are all numbers in the scanner. Here's the 10-year now. Now you've got support at 132.10. And, I think it's just always going to be game on when it comes to the 10-year. I think you just blocked the short side out. Why in the world? This is the safety play of all times right now, folks. And why in the world would this thing come off now? The only reason it come off is to come down to support, and then you automatically, robotically just buy the thing. This is about as free a trade as I've ever seen, actually. So let's take a look at the euro also. Let's go back into the currency situation. Let's look at the dollar next, excuse me. Same situation here. We've talked about 98 as the targets possibly on this. It actually may be a lot higher when all things are said and done. Had a little bit of disturbance, stopped out yesterday. This thing completely got full-blown nitrous oxide built into it. It's rallied up. But let's take a look at the euro. So this is the dollar, something to not short, as you guys can imagine. But let's take a look at the euro here. This is the one that, hasn't acted super bad. And we've come down and touched this support here. What's the low? 109.12. The unfair low is 108.86. So we've come within, 20 ticks, 15 ticks, something like that, of the unfair low, and we bounced up. This is quite incredible that this thing's actually hanging in there. I think the long-term view on this one now is, here's the breakdown below that 112.95. We talked about that. There's the inflection point up top, 114.15. So what do you do with this now? In my opinion, you got to wait for new inflection points and just sell this thing. I don't see people piling into the euro right now in the middle of this. I mean, this is, obviously got some relationship to what's going on in Great Britain and the possible new rhetoric coming from other countries. I think, I just see this as a long-term exodus on the euro for a little while. So the short-term inflection points you've got here are 111.16. It's the only thing we have to look at here on the 60-minute, and 109.62 if you're day trading. Weekly closes below 108.86. This thing easily could finally see par with the dollar. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. There's so much going on this morning. Thanks for bearing with me. There's people standing in line to hit me this morning. Here we go. British pound. Again, we talked about this thing getting back up into 140. Hit. I don't know. Is somebody trying to hit me here? Here we go. Back up into 140 as a retracement back up into that weekly unfair low. That happened 4 or 5 hours ago. So remember, these inflection points on days like today, guys. If you got the scanner, you're watching me. We can't cover everything, but that scanner's got 5,000 instruments in it. Hopefully, it covers everything. Anything you want to trade or watch or have the ability to pick battles and, more importantly, play defense with, that scanner is going to give you those levels, and it's going to give you some biased directional components here because when you've got a situation like this. You want to look at all time frames and put the full picture together. If you're just joining us in the den for the first time, you're probably going, well, what the heck does that mean? We talk about a lot of different methodologies. There's some decent videos. Again, I could do 1,000 on the scanner. There's so many different ways to use it. But right now, you've got some doesn't happen but once a decade event going on, and these prices are kind of in the ether right now. They're floating around. Nobody knows how to price anything. And that's one of the things that is very difficult on mornings like this morning. Okay, we talked about the euro and we talked about my thoughts of the euro coming off. Ultimately, what is the real value of the euro with, everybody up in the air about whether they even want to stay in the euro. And is that a good thing overall? I actually think it is. But in the short term, nobody knows how to price things. And if you've got, British pound's getting killed against the dollar. Should it get killed against the euro? Yes. But then how does the euro get affected by the Japanese yen, which is what we're going to talk about that. It's just a pricing puzzle right now. So going back to the hardcore inflection points of the underlying instruments itself, I cannot trade, period, without being able to pick battles somewhere and, more importantly, play defense. That's like the third time I've said it this morning. So in this case, you have to be patient. You have to, okay, God, it's moving around. It's moving around. I want to make some money anyhow, anyway. You're going to have to still be patient and wait for these inflection points to be hit so you can actually put the stops, and you can do massive risk reward ratio type trades on days like today. And guys who are smart, and I hate to be a Monday morning quarterback, they've really waited for opportunities like this. You don't know when they're going to happen, but keeping the powder dry and having that, extra little bit of money to play around with on days like today, you can, wait for the market to come to you, put your stops in, and see what happens. And those are, you're going to get the movement. Here's the yen. Let's see. Is Tom telling everybody not to trade and just go fishing? Let's see. Okay. I thought you were saying okay. Here we go. So here's the yen trade. And we talked about this thing ultimately getting down to 101.33. Well, that happened. But I personally think, using a term from Tucker out of the den, the back the truck up scene, if you're going to look at this, why is the yen becoming valued? And that means this thing's going down on the chart. Why is the yen with over 2 times GDP and debt and not a lot of rosy things on the horizon for Japan? 1 out of every 7 houses in Japan, by the way, is vacant. That's true. Look it up. So, you've got a lot of different things that are not exactly the most attractive thing in the world for that country. This particular currency, for some crazy reason, again, there's 100 things out there to 50-50 on why this thing got valued last night. But in my opinion, this is one that's not going to hang in there and become, or continue to stay the safety play. I think we've reached our targets here. This was the massive big number before. We've technically reached that. I think you can play some defense below it. And I think we rally, 1,000 pips on the yen here. And that means the devaluation of the yen ultimately. And the safety play is to give it to the U.S., where people are trying to break up the house rules, sit in. There's all kinds of wacky things going on here, but here we go. All right. So, yeah, it's hard to read all the den comments right now with all these things going on. So, guys, I'm going to check the den comments on the break. I promise you on that. Taking a look at gold, this is, we're just trying to hit the main pressure points, and then we're going to gravitate into some stock plays and some sectors. And our friend, the utilities, I'm sure will be the, thirst for yield possibly, but there's going to be a little bit of a tug of war on that. We'll talk about that a little bit. Gold, I'm sure Tom O'Brien stayed up all night looking at this one. You got what was this 1250 to 1360? What is that? So how do you trade gold today? How do you day trade this thing, and where's the leverage? I think this is, the long person dream here when it comes to, we've made the major spike. We probably had a lot of people cover. We're spinning around here, consolidating again. This is one of those flag things. I think, even without the inflection points to hit here, I don't know if we're going to come back and revisit these actually. So in my opinion, you got to just basically, here's the 60-minute. My goodness. Ooh. You could wait until we have a new profile in the 60-minute. That would be the smart thing to do, to look at the inflection points on the scanner. But right now, you don't short this thing. It's not too high. I think we're going to move higher on gold. I see 0 reasons why that wouldn't happen. What was that, a 5% move? No, 7% move? Is that what we had in gold? All right. Okay. Let's see. Let's take a look at the S&Ps. Now, this is kind of interesting because, we obviously pulled back. I love how this thing has actually rallied back up into this 2033 area. And, we've kind of got up in there with a little bit of noise. We backed off. I don't know if calmer heads are going to, oh, God, everything's going to work out. Nothing's changed. There's going to be a lot of that rhetoric coming out this morning. But when these currency fluctuations happen, folks, if you look back in time, this is what really, really drives, equities markets and the volatility within. I don't know if this is going to just be like, they're going to sort this thing out in 2 years. Currency volatility, we're going to talk about this a little bit more when we come back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We were talking about the S&Ps, talking about this 2033 area, those weekly unfair lows. We've gotten back above, and I don't. Again, you've got to be willing to just, take the stops today. Things can get away from you. This thing could go, who knows? I mean, we could go back above 2,100, but again, that's what stops are for. I think we're probably, the U.S. markets are going to open. There's going to be a little bit of a lid on this. I'm trying to give myself personally, I'm actually looking at Nadex a little bit here for today. Stops above 2033 with a little bit of noise. And just, I think this thing could easily see 2000 again down here and retest this. This is not something very settling for the market. It's a sea change event with currency fluctuations. If you look back in time, those are the things that really, really, cause market turns to happen and just, bedlam, if you will. Let's take a look at crude oil really quick. Here we go. This is the August contract. So, without question, a lot of commodities are going to come off. I mean, the dollar's getting strong as I don't know what. And I think these things are probably going to, the things like crude oil are probably not going to hold support if there is any down here, like the 47.58. I think a daily close below there is probably in order. I think you've got better things to put your money to work on other than crude. I mean, crude's a little bit of an outlier relative to other instruments that are out there and available to trade right now that are just, if you're looking to day trade, there's going to be a lot of sector rotation, or portfolio rebalancing today after the fact. A lot of these guys who are, the betterment guys of the world who are just socking money into indices type benchmark related, okay, if the market, we talked about this at length, if the market comes down, hey, that's the luck of being in the market. And we want to make sure we're catching all the waves up. So if you want to play that game, you can't mitigate the risk if you're going to try to play that game. So we'll see how much of the how many of the betterment type investor folks are going to be happy at the end of the month. Well, when's the end of the month when they get their statement? Or I guess they could see it online real time as soon as they mark the ETFs. Here we go. All right, so again, we usually cover quite a few different usual suspects. I'm going to hit soybeans here really quick. Again, dollar related, just spirit of the economy type situation going on here. Beans, corn, a lot of these commodities are just repricing themselves, except for gold, of course, because of the fear factor. So let's see if we have any prints on the XLF here. This is going to just be I don't know if I can say that. We're right down at 2204, basically. It looks like we're trading 2213. So we talked about, this event, nobody really foresaw this, obviously. But here's the unfair lows when it comes to, the weekly unfair lows is 2204. The thirst for yield situation, we're going to have to take a look at the utilities. But again, the yield curve, if you look at some of the yield curve numbers right now, the XLF that's not going to bode well at all. And a lot of banking, obviously, with the currency situation I personally think we're going to close below 2204. Do you have a little bit of a trading opportunity here for a bounce this morning? I would not play around with this. This is kind of a wait and see, and I think we're going to probably break stride, get out of this balanced area, start hitting it on the downside. And there's going to be a lot of folks coming out with announcements today trying to calm people's fears. And that's all they're trying to do. That's all they can do. But the facts are, as we've stated a couple of times already, these currency fluctuations and these sea change events will rock markets, and it's not going to stop anytime soon. I mean, think about it. There's going to be uncertainty with this Brexit thing and other countries trying to leave the EU. Then what's the value of the euro ultimately? Who knows? And then, how do you, if you're Caterpillar, how do you're doing business overseas, how do you price all this? I mean, how do you sell products? I mean, think about how impacting this really is. And every single company in the United States that does or doesn't have international exposure is going to be affected. And these guys, like yesterday at the Bloomberg event, they got their pencil out and the propellers on top of their head, and there's no way to. Their whole world has been rocked. So what are they going to do? Their whole thing is, oh God, it's time to sit on the sidelines after the event. So you're going to have, volatility. Whew. Here we go. All right. So let's take a look and see what some of the, if we got any prints this morning. The Apples of the world. 93.63. Is that where we're at? Let me see. Yeah. I showed 93.63 as last print. So ultimately, we've talked about this 91.76 on Apple. I think you got better use of your capital than looking at Apple today. I don't think this is one that's going to bounce, even if the market rallies. And you're already gapping down. Let's take a look at the 10-year again really quick. I wanted to point something out. On the 10-year, this is in the scanner. You got 132.17 as short-term support. This is our 60-minute. Again, I think you've got to be, and you got big, huge support around 132.10, 132.11. So you got a little bit of a DMZ. You might want to just sit tight for a little bit on the 10-year. And again, I think you got to be buying support on the 10-year. It's probably the, and obviously put your stops in on this, but this is one where I can't see a lot of these portfolio managers not having to pile into at least a parking lot for a while. Here's the S&Ps, kind of still hovering around that 2033 area with a little bit of noise. I'm not exactly super excited about buying this. I think we could revisit 2000 on the S&Ps. Going back to gold, just give you some updates here. Nothing to hang on to here if you're joining us late. There's nothing really to lean on. If you weren't in this, with some calls beforehand or however you played this beforehand, you're kind of in the ether right here floating around. Let's take a look at the Bund, the Euro Bund. This is the September contract. The only thing you really have to hang on to here is, you've got a you got a 240 profile that has appeared well below price action. There's that. I mean, remember, this thing was already, in the land of negative interest rates. Some of the European Treasury type instruments. Here's the 60-minute, 165.72. That's support right now, short-term support on the Bund. Let's go back to the currencies. Just to give you some updates. Canadian dollar. You knew this was going to happen. We're going to talk about this a little bit more when we come back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show, and gotta apologize to you. I've had about an hour's sleep. What a crazy night. I know you guys are probably in the same boat here. So stuttering a little bit this morning, trying to cover some of the things that I think we should be aware of before any bets are being made on the U.S. markets or stocks in general. What I want to do is bring up the scanner really quick. As Jay was saying earlier, it didn't break. Actually, a lot of stocks aren't open yet here, so we're still waiting for some of the, breath calculations. I mean, a lot of stocks don't even know where to open. Think if you're the special, well, remember back in the day, I don't know if Tom's listening to this, back in the day when the specialists basically ran the G's of the world and the Proctors and Gambles of the world. Now you got all the ECNs and everybody and their brother making markets in them. It was always, they opened them where they wanted to, But right now, a lot of these consensus figures aren't out exactly yet. So we're going to have to wait and see, and the breadth calculations, therefore, are going to be dependent on that. I want to go into the ETF section, and before we do that, I just want you to see, here's our daily. I just want you to look at some of the things that have already happened. This is we got 19 indices up here right now. 1, 2, 3, 4, 5. Let me do the math here. Yeah, 19. Wow. Anyway, so a lot of these indices have, in the Shanghai, kind of a rigged market, as you know, especially pricing with the yuan. Hasn't actually acted terribly bad. I mean, you've had the Nikkei just come apart at the seams, and you've got basically every stock in the Nikkei. If you look at this, and we do this real time for you, there's a couple of things that don't look super mega bad. There's Tokiyama Corp. I know you guys are really interested in trading Tokiyama Corp. That's why I'm mentioning it. But again, it picks out anomalies, things to be aware of, things that might be little shining stars. We're going to look at some ETFs in the U.S. and some stocks in general based on that concept. But man, look at this. This is sick. You got 3 stocks trading above profiles in the Nikkei on the daily. Put that in your hat. Here we go. Daily. As we look at this, let's just kind of look and gaze back into the XLU. And let's look at this. Let's just do a sort. What's trading above profiles here on the 60-minute? Let's just see if we have. Let's just look here. Yeah, a lot of these stocks aren't printing yet. Let me see. Nope. Yeah. Just a waiting game a little bit here, but I'd keep your eye on this sector. It may be something to look at as a safety play. Yeah, this thing's locked up here. Okay, here we go. All right, so I want to go back to the British pound for just a second here. Okay, that's not the British pound, that's the Aussie dollar. All right, so going back to the GBP, here's the 60 minutes. Now remember, these were, in force as this thing was going down. Then we get the output. There's that yellow peel back happening in the scanner on the 60 minute, and that weekly unfair low was around 140.40, 140.14, something like that. So we've come back down. We've come back and retested. Now we're just kind of flailing around down here. What do you do with the British pound? You've got to wait for inflection points. You've got to let this, it has to get near an inflection point for you to pick a battle to more importantly be able to play defense. Right now, there's really nothing to hang on to here. The major inflection points as they've already been reached. If you're thinking, oh my God, I got to trade the British pound right now because that's where all the volatility is, actually, that's probably not going to be the case. The big move in this has been made. All things have been settled out for the most part, and you've got other instruments now that need to reprice themselves, especially based on, quite a few anomalies going on. Japanese yen, we've talked about. I think this is actually, to some degree, a long play to at least get back into 105.41 ultimately. Remember, as this thing goes down, the chart on the Japanese yen goes down. That means it gets more valued, which is not like the dollar chart that we look at, which are those 6 major currencies in a basket. Let's take a look at the Canadian dollar. We were going to mention that a while back. I mean, oil's coming off tremendously. The dollar's rallying like crazy. Canadian dollar, similar effect. As it climbs, it becomes more and more devalued. Again, not a huge reaction. If you look at the weekly on the Canadian dollar, nothing really to write home about this. I think ultimately 133, 107 is going to be hit here. You could play defense below 128.51. But again, we haven't even come back and retest anything. I think this is a wait and see on the Canadian dollar. So you're kind of waiting for a retest of that breakout on the daily there. Let's take a look at the ruble. Just bouncing around here pre-market. There it is. I wouldn't use a lot of brain space on that today. All right, so going back into our stock and futures chart, let's take a look at Facebook. Let's just see if this thing's got a print on it and see what some of the bellwether longs are doing. So we've talked about support at 113.64 on the Facebook. I mean, an event like this, all bets are off. So we've obviously broken down below that support. But again, 111.40, again, what are we down? Less than 1.5% maybe. So again, I don't think you've got a big problem here with Facebook. I don't think this is something to be too terribly concerned about. And if we get back anywhere near 113.64 or above, especially on a daily close, I think you just got to pile into this thing even more so. But right now it's kind of a wait and see. You've got a big balanced area down to 103.59 on Facebook. Let's see how the guy who just spent $2.8 billion on a solar company is doing. Let's see if we got a real print here. 189.45. So Tesla down again. We talked about, this is something that was just probably going to continue to sink. Obviously, the market's helping that concept. And remember, lately in the scanner, we were going into the S&P sector and trying to find stocks that really weren't cooperating. So we were doing a couple little custom sorts here and there. These are obviously going to change significantly as stocks start printing this morning. But a couple of these stocks we were looking at, there's the First Solars of the world. There's the H&R Blocks. These were ones that it was okay to be short, not okay to be long. And in a market that continued to go north or kind of catch a bid before all this happened, these were the stocks that weren't going to be as painful if the market goes up. And if the market comes down, these are the ones that, just by default are going to probably come apart at the seams. So what else do we look at on here? FE, Bed Bath & Beyond, Anthem. We're going to be right back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. I think we've got Richard from New York on with us. Richard, are you there?
Yes. Hi. Good morning, John. Could you just talk about margin calls going forward, and how would they affect the markets, in the next few days? And also, how would the Fed get involved in trying to protect the markets? What are your views on these?
Well, on the margin call situation, I don't think that this is enough to really start triggering massive margin calls yet. I think we will have some more downside here, but right now, we basically just come off all-time highs. If you want to kind of step back and look at it, we've come off 2,100 to 2035. I mean, as we're at right now, I don't think that's going to be a major factor yet. I think ultimately we're going to slide farther. What can the Fed do to try to? They can come out with a couple of statements saying that they're working with the UK government and the blah 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 whatever, trying to sort things out, but I don't think anything's going to stop the near-term bedlam, and I don't think that the U.S. stock market is going to like all the shifting around and the repricing kind of no man's land that we spoke of earlier. So I think we're still going to continue to sell off here. I mean, this is a massive, massive event. This happens, I can't even, this, and everything's so tied together these days, Richard, with perfection, if you know what I mean. I mean, a lot of these, business models and, revenue forecasts and things like that are really pricing in all these things working and clicking on all cylinders. This is a complete derailment of, the way that they want and think that things are going to happen. So I guess the ultimate answer to what you're talking about is I don't think whatever the Fed says is going to make a lot of difference. I don't think margin calls are going to, really start being a factor yet. And I think the market's going to continue to sell off.
How do you see or talking to your constituents if there's a domino effect like France and other countries trying to come from the EU?
That's what I think is going to be the overhanging, just kind of black cloud, if you will, on this whole thing. And that uncertainty in itself, we're talking about maybe dismantling a major currency and, the whole European Union coming apart at the seams. Those fears, that this is going to fuel all the guys, the Trump-esque type guys out there that are in these other countries that have been lobbying for these kind of disengagement type situations, from larger entities. We may have, the state of Texas kick up again and say, hey, we want to be our own country after this. There's so many things that can be talked about now and so many unsettling things. Why, as an investor, why would you pile into longs right now? You got to think about that. And that's what, the MO is for a lot of folks out there in the investor world. That's what's going to drive the S&Ps. And I think at best, they're going to be sitting on the sidelines. People are going to be wanting to not be involved with this moving forward. This is a scary situation, and nobody knows how it's going to, turn out. It's trying to reprice things again. Going back to that currency sea change event, trying to reprice things is like super mega bad for equities and revenue streams, and being able to actually count on numbers that they've forecasted moving forward. Richard, I'm sorry I rambled there.
Well, no, that's great. On the other hand, is there any type of possibility or probability that the politicians in London may say, well, look what you guys did to the markets. You're going to have a chance to revote on this, and they reverse their decision, and, the short squeeze drives the markets back up?
Yeah, that could happen. I don't think that's going to happen today, though. I think we're just going to have massive fear, and this is going to not allay anytime soon. Richard, thanks for calling in. Stay tuned for TFNN all day. This is going to be the place to be, folks.
Okay.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.